Barnstable This Morning, just about 20 minutes toward the top of the hour on this Tuesday morning. I'm Sarah Colvin, and joining me live on the phone, I welcome our Cape and Islands State Senator Dan Wolf. Senator Wolf, good morning.
Good morning, Sarah. Happy spring, and to all the listeners as well.
Absolutely. Happy spring to you. It's glad to finally be here. So today, of course, one thing that happens in the spring is the budget process, right? It keeps us going until the summertime. And one of the things, or actually this is proposed, is an expansion of the earned income tax credit. So for the layperson, Dan, who may not know too much about this, what is the earned income tax credit all about?
Well, the earned income tax credit goes back to the mid or late 1970s at a federal level, where the government was looking for ways to stimulate the economy from the low end, and that is really to put money back into the pockets of poor and low-income earners. And so the federal government has been doing it for decades now. A lot of states picked up on it because it's such a successful plan, and it really is part of welfare reform. It's rewarding people who work, but understanding that a lot of people in our workforce don't make enough to really make ends meet. So this is a way through tax policy to help the low-end wage earners actually make ends meet. So a lot of states picking up on what the federal government was doing set up state earned income tax credits, which are indexed to the federal. So in Massachusetts, for a number of years now, we've had a earned income tax credit on the state returns that equals 15% of whatever somebody is taking as an earned income tax credit on their federal return. On the federal return, it goes as high as a little over $6,000, depending on how much income you make and how many kids and dependents you have. So at Massachusetts, if you're figuring somebody can get a $6,000 credit on their federal, 15% of that is about $900. And so that's about been the maximum now. And again, that's 15% of the federal EITC. The governor, a couple of weeks ago, released a plan that would, over time, double the earned income tax credit from 15% of the federal to 30%, which would put it in line with a lot of our neighboring states. So it's not like this is a radical overstep. This sort of brings us up to what some of our neighboring states here in New England are doing. It would raise the benefit for those who are now getting $900 of credit on a state income tax to about $1,800, and put a lot of money back out into circulation and really help those at the lower end of the earning spectrum. So I think it's a great idea.
Indeed, and the folks that are the hardest hit by those taxes, certainly, any extra money in the pocket is always a good thing. Now, of course, with everything there are pluses and there are negatives. Are there any negatives that you see to this proposed increase?
Well, like everything, as long as we have a very regressive tax system in Massachusetts, that is to say the people at the bottom are actually paying a higher percent of their income than the people at the top. When we float something like this, which gives relief to people at the bottom, we have to figure out a way that we're going to pay for it, because this is going to cost, as it phases in, up to $130 million a year. So the governor, at the same time as he proposed that, he proposed eliminating a tax loophole, which we've had for a number of years in the film industry, so that when a film company comes to Massachusetts and does a film, they get a rather significant tax break in order to do it. It's an incentive for those companies to come and make films here. The analysis that we have in front of us from the Department of Revenue shows that film credit costs the Commonwealth in taxes that we don't collect about $119,000 per job per year that it creates. So the governor, I think, looked at that and said, that is about as stupid a tax break as we could be giving, and therefore is proposing that we eliminate that and use that proceed to pay for the earned income tax credit. We did have a hearing last week. I'm on the Revenue Committee, and we did have a hearing last week, and we heard a lot of folks who are adamantly opposed to eliminating the film tax loophole, and that's going to be, I think, a healthy debate in the legislature, although the Speaker has already indicated in his infinite wisdom that he will not allow the film tax credit to be undone. So I guess that puts us back. If we're going to do the EITC, we're going to have to figure out a way to pay for it.
Indeed, and certainly, I have heard arguments on both sides of that film tax credit debate, and just seeing how many movies and different people have been interested in making films here in Massachusetts in the past several years. I agree with you that it definitely is going to be a healthy debate surrounding that. Wanted to talk a little bit more, Dan, about the benefits of the earned income tax credit and thinking about, people in poverty. I'm looking at some statistics that said, the earned income tax credit helps keep more than 74,000 Massachusetts children out of poverty.
Right. It would, because it's targeted at parents or families where there are children. It's very targeted to help those families where they're right on the edge and where those kids are living in poverty. Right now, about 14 or 15%, believe it or not, kind of a stark statistic, but 14 or 15% of the children in the Commonwealth are living in homes below the poverty level. So that 74,000 is quite a dent into those children who are waking up every morning in poverty in the Commonwealth. And by the way, the EITC is bipartisan. I mean, I don't know of a single person who doesn't support the governor's proposal, and I think it's great early in his administration that he's proposed it.
What are the qualifications for receiving this benefit?
It phases in, Sarah, so the best way if someone wants to know whether they qualify is just to go online, Google EITC federal credit, and there's the IRS has all kinds of tables in there that bracket the income levels and then tell you filing singly or filing married, and then with a number of children, what you would be eligible for the credit. So it's pretty complicated. It's a big table. Again, fairly easy to read, but there's a lot of brackets. It phases in. It really starts to help families that are making the most, between $14,000 and $25,000 a year, and then above $25,000, it starts to slowly diminish. And above a family income of $50,000, the credit goes away. There isn't one. So it really is aimed at the lower and lower middle class income earners, which is exactly where a lot of the struggling families are right now. So it really is a great idea. The maximum you would get is you have 3 or more kids filing jointly and have an income of somewhere between $15,000 and $25,000, as I said.
Indeed. Now, there's a third facet to this House Bill 62. We talked obviously about the earned income tax credit, the film tax credit, but there's also a tax amnesty program, which is supposed to result in $100 million in revenue. What do you know about this, and what can you tell me about that tax amnesty program?
Well, I'll believe it when I see it, because what this amnesty is aimed at is that people who in the past, businesses who in the past have not actually even filed state income tax returns, corporate state income tax returns. And I really question whether providing amnesty, and again, the amnesty would be on penalties and interest, whether providing that is going to be enough incentive to actually bring people out from the under economy where they're not filing and paying taxes to incentivize them to pay. I think that it would be much wiser to actually make sure that the Department of Revenue has reasonable audit and enforcement capabilities, and is really out in this economy looking for people who are not paying. It's a huge expense to those of us who do pay taxes. As somebody who's run a business for 27 years now and always made it a point to pay, because that is part of our social contract. I would like to see us going after those who aren't paying, so that those of us who do pay are not carrying all the burden. But this amnesty thing, it does seem to be popular in certain circles. There are other examples where amnesty programs have paid off a lot. I'm just not sure whether this one's going to work. And the distinction, Sarah, being they've had amnesty programs for people who file, but who have either missed or understated what the tax liability is. That's a very different amnesty than trying to bring people who have never filed into what I would call the legitimate business world, where they're paying taxes and filing. So it is a little bit of an unknown. That's the estimate from the administration. I'm not sure I completely buy that one.
So the amnesty wouldn't necessarily not be that you don't have to pay your taxes, but you do have to pay, but we'll forgive you these fees and interest and all of that business.
That's right. And I think in some cases it does forgive past taxes. I think people who are interested in knowing more about it should go online and read the proposal. But I think what it would do is you would be, obviously you would be obligated to pay current taxes. But I think looking back, it says, look, if you sign up now and get legitimate and start paying, we will forgive the past sins. So what that means is for the current tax year, if people do that, they would pay this year, but they would be forgiven for past years. Again, it's going to be, I think, hotly debated. I have mixed feelings about it, but one of the things I do think, regardless of the philosophy of it, I'm not sure that it's going to actually reap the benefits that the administration is saying it's going to reap.
So where are we in the process for this bill?
There's been a hearing for all three. There was a hearing last week. The Joint Committee on Revenue is one of the committees that is functioning now. Held a hearing last week. I think the House is going to debate it. One of the questions, as I indicated earlier, is the Speaker has indicated that there's no way that the elimination of the film tax credit is going to make it through the House. So I think one of the things that's going to be debated, since the earned income tax credit is going to be, I think, a unanimous pass, there has to be some way to pay for it. And I think that's what you're going to see the legislature struggling with. If we don't use the elimination of the film tax credit, how do we pay for the earned income tax credit? I think you're going to see that moving through the House between now and sometime in May, I would guess, and along also with the tax amnesty bill. And then it'll come over to the Senate, of course. And I'm not sure whether all this will happen before or after the budget process, which is well underway now.
Great. Well, Senator Wolf, I thank you so much, as always, for joining us here on Barnstable This Morning. A pleasure to have you on the program, and we will talk with you again in a couple of weeks. Enjoy
Thanks,
the weather.
Sarah. Have a great week. We'll talk to you.
Thanks, Dan. Bye-bye.
Bye-bye.
Cape and Island State Senator Dan Wolf joins us every other Tuesday here on Barnstable This Morning.